I think we got to start off with Jay Powell speaking later today. What are your expectations for what he's going to say? Also, the market reaction.
Sure. So I think we're going to hear much of what we've seen before. I'm not sure we're going to get any big surprises. I think, last year was probably the biggest Jackson Hole surprise that we've seen. I think this year is going to be a little less, just because they are a little unsure after that July unemployment report. And so I think they're going to be a little more cautious, perhaps saying that they're going to do a cut or making it more likely for September, but certainly not giving us any indication about the magnitude of the cut, because I think just like your prior guest said, we're really looking at that August job report that comes out at the beginning of September. I think that is going to be the last critical point and information that they're going to be looking at before they can give us any real indication.
Erin, you're focusing a lot on jobs right now. I want to get your take on that downward revision of jobs, over 800,000 that we saw. What was your reaction to that? How do you think the Fed's reading that?
For me, I think it was something that, people were complaining and feeling. It really reaffirmed what people had been saying all along. And while a lot of people are dismissing it and saying that the Fed may not look at it, I disagree on that point. I think it is something that we look at, because when we got that initial shock of the jobs report for July, there was a lot of dismissiveness and, it's just because of immigration, and they sort of poo-pooed it. And that's why we saw the markets drop and then rebound immediately. And so I think this is just another crack that we're seeing, and this causes a lot of concern for me of how are we really going to unwind all this stimulus, and how are we already too late when it comes to creating negative unemployment or slowing unemployment.
One more big question for you.
Sure.
We've been talking about this earlier in the show. Big week for the markets, for the economy. Jay Powell today, Nvidia next week. Just a very quick take on how you see Nvidia earnings playing out. We were just talking about EPS growth forecasted to be 125% higher.
Look, I think Nvidia has a great track record of being able to beat the earnings. I think they'll do well. I'm not sure they're going to be able to braze the remainder of the AI sector, but Nvidia is its own entity in being able to navigate this space.
All right, last but not least, give us your WEX word of the day and why you're picking that.
Sure. My WEX word of the day is Euro reversal, and this is largely about just, again, this unwinding, this cautionary fear that I'm looking at if we do get poor unemployment. And so I'm looking at nice, stable European companies that can do well, that are just low valuation, low risk, and won't have as much of a turmoil if we see some disappointing reports come out and see that volatility that we just saw in October. They're much more stable and can still give you some nice upside.
But Erin, all eyes are on the U.S., specifically Wyoming today, and you're looking over at Europe. The idea here is that we're going to get rate cuts, possibly a quarter, maybe even 50 basis points. Isn't that the time to put money in the U.S. market? Why would you want to leave the U.S. as we go into a rate cut?
Well, because the ECB had already cut rates back in June, so they're looking to stimulate. And it's not so much that I'm saying that Europe is going to outperform America. I'm saying the American markets are extraordinarily frothy. We've gotten back up to those high valuations, and we have a lot of risk if we don't perform to perfection. And I think there are enough cracks out there to say that this could be a disappointment, and we could see some downside.